They are not telling you about the billionaires, family offices and pension funds that control trillions and move markets. These institutions are quietly rotating out of traditional assets like stocks, bonds and cash and into hard assets. They are doing this without headlines or panic selling. They have already positioned themselves and are waiting for wider recognition. 3 signals to watch. Family offices are increasing hard asset allocations. Surveys show average family office allocations to hard assets, precious metals, commodities, farmland, timber, rose to about 21.4% from 8.7% in 5 years. The last time allocations were this high was 1971, when the dollar was decoupled from gold and inflation harmed holders of normal assets. Wealthy families with long memory are moving to protect purchasing power. The Treasury basis trade is unwinding. Hedge funds use a leveraged basis trade in treasuries worth over $1 trillion. When the spread between futures and bonds widens, forced selling and margin calls can break the Treasury market. That happened in March 2020 and required massive central bank intervention. Today the Fed has less room to act because inflation is higher and its balance sheet is large. A severe unwind could force policymakers into damaging choices. Central banks are buying record amounts of gold. Central bank purchases hit record levels in 2023 and 2024, driven by several major buyers. When many central banks accumulate gold and none sell, it creates a structural imbalance and signals distrust in paper currencies. Gold is being held as protection against systemic risk. Why it matters. The combined signals show a shift away from the 40-year playbook of stocks for growth and bonds for safety. Inflation appears structural, global monetary dynamics are changing, and the dollar's dominance faces pressure. The gap between institutional positioning and typical retail allocations is widening. What to do now? Audit exposure. Check how much of your portfolio is in stocks, bonds and bank cash versus non-printable assets. Learn what institutions buy. Consider exposure to precious metals, commodities, farmland and other tangible assets. Diversified jurisdiction risk. Hold some assets outside a single currency or banking system. Act sooner rather than later. The window to reposition is narrowing as institutions already move. Conclusion. Family offices shifting to hard assets, stress in treasury market plumbing, and record central bank gold buying together point to a major structural change. Consider aligning allocations to protect real purchasing power before the window closes.